particular fourth class for the May 21, November 21 regular batch. First of all, students, let me in fact now tell to all the students that you will all have to maintain, or like all these students who are already registered now, like there are many WhatsApp groups which has been made for the batch. Apart from that, those who have enrolled, kindly do make a WhatsApp students at this number to get yourself put up in the WhatsApp group. Okay, so all the registered students for May 21, November 21 attempt. Now, if many of you are already there in the WhatsApp group, but if somebody who are not yet being put across in a WhatsApp group, please do enroll. Please do message at this number to tell and just suggest them that to put you in the WhatsApp group. I'll also put across my contact detail as well just below this. Okay, this is only for WhatsApp purpose, students. So these are the two numbers. First is my team number and second is my own number. So just do the WhatsApp and accordingly get yourself in that particular WhatsApp group, so that apart from the queries that you may ask in the online, at least those G drive students who are there and the pen drive students who are there, they would be in a position to address or take up their queries in that particular WhatsApp group. So let's start then, students, our discussion. Let's start, students, in this context. We are now towards an important stage at this point of time. We are doing the classification part, where we are now into it. Computation of total income involves 1. The existence of an income, which means revenue receipt plus the specified capital receipt. This particular income should also fall within the scope of section 5, which will give you the qualifying amount, the qualifying income. The income which falls within the scope of section 5, we have said that, or we are referring this to be as the qualifying income, and therefore it is in respect of this qualifying income that the computation is to be made in the manner laid down under the Act. So students, I told you two things. One is what to compute and how to compute. So what to compute is the qualifying income, and how to compute is in the manner laid down under the Act. Now the computation therefore involve two steps. Step number 1 is about the classification of this qualifying income into the appropriate heads. Why this classification is necessary? Because each heads of income has a distinct mode of computation in that particular head, and therefore the computation becomes necessary. The classification becomes necessary into the appropriate or the correct head. So therefore, students, the first step in the process of the computation of the total income requires the classification of the qualifying income into the correct head. And thereafter, students, we have seen so far what is the principle of classification. And in the principle of classification, the first point that I have made a mention was of the specific charge. So first was, students, the specific charge. Specific charge, if you can recall, unconditional or condition based. So specific charge which is unconditionally, there is an unconditional based specific charge, or it is condition based. If it is unconditionally charged, you don't have to think about it, that is who has earned it or in which circumstances the income has been earned. These becomes irrelevant factors. We have got certain examples written, and those were dividend, gift, lottery winnings. And the second one was the condition based classification, the condition based specific charge, for which we have to see the charge, although specific, but it is subject to a condition that the classification will be made into the appropriate head, subject to the satisfaction of the condition that the classification of that specific charge will be made in the appropriate head. This is what we have done, students, so far in terms of the specific charge. We have seen a couple of case laws also in our discussion up till now in the specific charge, and thereafter, students, I told you that the balance 95% of the qualifying income the balance 95% of the qualifying income, they will be charged. The chargeability in respect of the balance 95% of the qualifying income will be as per the test laid down in the general charging section of each and every heads of income. So therefore, specific charge, once the classification, we are in the process of classification primarily. Once the classification, we first will look into the specific charge, meaning thereby a particular income is specifically referred and charged in a particular heads of income. This is what is known as a specific charge. But as I told you, it is only 5% of the total classification. Balance entire classification of your qualifying income will be based on what? The test which is laid down in the general charging section of each and every heads of income. So this is what now, students, we will be looking into it. So what is that particular context of the general chargeability? So I have already given you the note here in the last lecture, general chargeability. So therefore I'll put it here because I don't have that space above. So general charge. Okay, now in the context of general charge, students, herein you will find, students, the first section of each heads of income. The first section of each heads of income is all about the general chargeability. The first section, students, of each heads of income is all about what? The general chargeability. So in this context, students, the first section of each heads of income, first is all you know, salary. Now if you know herein, in this context, salary, section 15 to section 17 is the range for this particular salary. Section 15 to section 17, this is the range for salary. Accordingly, the charging section, the first section, what I told you, charging section is 15. Now when an amount will be classified under the head salary, so when an amount will be classified under the head salary, what is the test, students? When an amount will be classified under the head salary, what will be the test on the basis of which the income will be classified under the head salary? Say fast. I think all of you are of the opinion, all the students are of the opinion that the test is the employer and employer relationship, isn't it? So all the students are of equal view that there is an employer and employer relationship. Very true. You can just pick up and quickly make a note of it here, students. Quickly just write it down here in any amount. So this section 15 is a general charging section. It is a general charge. So please write here in any amount received in consequence of the employment. In consequence of the employment, if I am receiving the amount, students, in consequence of the employment, if I am receiving the amount, then that particular amount so received will be classified under the head salary. In fact, we'll look upon some very sophisticated examples, students. I think in your IPCC level up till now, what you have studied was like, if you remember in your IPCC, the IPCC level examples that you have seen, which was that there was a person who was a teacher in the college. Fine, so he was getting remuneration from the college. At the same time, he was also getting remuneration from the university for being the paper checker. He was also correcting the papers. So remember those IPCC sort of example that you have done it in your IPCC level. Whatever remuneration that has been received from the college, the classification of the same will be done under the head salary. Whereas the remuneration that you have received from the university, that classification will be done under the head. Which head? Under the head IFOS. So those sort of examples you have done in your IPCC, essentially what you were doing was the classification of the income. At final CA level, we will look into some very sophisticated example, students, of the classification, but just refreshing your memory as to those golden days of your life when you were all in IPCC, isn't it? So those were the times when these examples you have encountered, and the classification examples was in terms of salary. I gave you the example, or amount received from the university, IFOS from your college where you are teaching, or your lecturer, that will be under the head salary. Second one, students, is a house property. Now the range of the section, students, under the head house property is from section 20 to section 27. Section 22 to section 27. And as I told you, the first section of the head is all about the general charge. Is about what? The general charge. What is general charge? It will give you the test on the basis of which, on the fulfillment of which, the income will be charged under the head house property. So what is that test? Let's have a look quickly, and here we will introduce some important case laws. Let's get started, students. So right therein, the annual value of the house property shall be charged under this head if the following conditions are satisfied. The annual value of the house property shall be charged under this head if the following conditions are satisfied. So what is that condition, students? The conditions are: point number A, the SSE is the owner of the house property Point number B, the property consists of building or land, appurtenant thereto. And the last point, students, I think something unusual stuff has happened. So here in student, anyways, I'll just repeat it quickly again. So I'll just dictate those particular points herein. So what was the first point that you have written? The annual value of the house property will be classified under this head if the following conditions are satisfied. Point number 1. And what is that point number 1? The first point was the assessee is the owner of the house property. Fine. Point number 2. Point number B. The property consists of building, or land appurtenant thereto. What do you mean by the term appurtenant thereto? It will mean what? It means a land which is attached to the building. A land which is attached to the building. Okay. So the property consists of building or land appurtenant thereto. And the third one, the assessee should not carry his business or profession in such house property. The assessee should not carry his business or profession in such house property. So these are the following three conditions on the fulfillment of which the annual value of the house property will be classified under the head house property. The annual value of the house property will be classified under the head house property. Did you all got this one? Fine friends. Now let's start with certain important case law and the judgments which are being there. So one of the important case judgment and the notable judgment which is there, let's start with that then. In this context, although this case laws and all are there in your booklet as well, students, in the book I've already have captured those particular case laws, but nevertheless, because these are the important judgment, I just want that at least few of them we'll just take a note of it. Okay, other than that we'll discuss it out, and as I told you, it is already there in your notes as well. Let's start. Important case law. First one in this regard is Chennai Properties and Investment Limited. A Supreme Court judgment, student. So first we need to understand the facts of the case. So let's first understand the facts of the case. So here was a case where the assessee was engaged. The assessee was engaged in what? The assessee was engaged in the business of the business of building the house property. He was engaged in the business of developing the house property for the purpose of let out. So engaged in the business of developing the house property for the purpose of let out. This was the mode of the activity of the assessee. Now I can give an example quickly so that you can just try to get, you can easily connect to that proposition. Like say for example, students, a mall. You would have seen a mall, which is the shopping malls and all. So if you see the shopping malls, which all of you maybe definitely have witnessed it, when we see there, we go there, we find there is a portfolio of vast majority of the goods as well as services which are supplied in various shops in the mall, So there are portfolio of goods and services which are being there in those particular shops, isn't it? And all these shops, you will find the builder, what he does is that the builder will ensure that these shops are given on rent. He is not selling the shops in that particular mall. He gives it on rent. Now, the builder, when he will try to give that particular shop on rent, he will ensure that he will first look into, he will screen the portfolio of the prospective tenants who have shown their, or who has given the expression of their interest to open up a shop in that, to take up the shop on rent in that particular mall. So he will screen the portfolio of his prospective tenant. He will ensure that all the tenants to whom this shop is been given on rent, they collectively create a very good portfolio of different kind of goods and services. They collectively create a very good portfolio of different kind of goods and services. You'll say, what is the advantage of the same? So advantage, students, of this is that there would be maximum footfall of the customers. By doing so, there will be what? A maximum footfall of the customer. And if there is a maximum footfall of the customer, in that particular context, students, you all are aware, if there is a maximum footfall of the customers in the mall, then what happens? Then in that particular case, students, the sales will increase. So if the sales in the shops will increase, then accordingly the income of these particular tenant will increase. And if the income of this tenant will increase, then this particular landlord or the developer of the mall will be in a position to enhance his rent. To enhance what? His rent. So accordingly, the question that has come up before the court was that the rental income earned by whom? The rental income earned by these particular developer by letting out this particular house property, under which particular head the income will be charged. Will it be under the head house property or will it be under the head PGBP? Which is the appropriate head for the purpose of the classification? Appropriate head, students, for the purpose of the classification? So the appropriate head for the classification, indeed it is what? It is PGBP. So there is no doubt, for the classification part, the appropriate head is PGBP. But why is it so, and how the court has come across with its judgment? So students, let's have a look how the court has come across with its judgment. First thing what the court has done was that this was a company, investment limited. So the company will have the MOA and the AOA, and in the MOA there will be an object clause. In the memorandum of association, students, there will be what? A object clause. And through the object clause, the Supreme Court went on to analyze what is the main object of the company. So accordingly, they came to know that the main object of the company was to develop the property for the purpose of leasing. Leasing was therefore leasing of the house property. So the leasing of the house property was a main activity. The leasing of the house property was the main activity. That is what the court has found from the memorandum of association, and that in its object clause. That is point number 1. Point number 2, students, now. Point number 2. The second point in this context was the Section 22, somebody who were of the opinion that, sir, but why don't Section 22? Because at the end of the day, somebody can say that, sir, it is the rent that he has earned by letting out that house property, which is actually a commercial house property, but it's a house property. And by letting out the same, what he has effectively has earned is the rental income. And since he has earned a rental income, therefore such rental income should only be classified under the head house property. Shall only be classified under the head house property. But please have a look to the 3 conditions on the basis of which the rental income will be classified under the head house property. Which are those 3 conditions? Number 1, the assessee should be the owner of the house property. Yes, in this particular case, the assessee indeed is the owner of the house property. There is no doubt about that. So ownership condition of the developer is satisfied. He continues to remain the owner of that particular house property. Property consists of building or land appurtenant thereto, even that is satisfied. But what about point number 3, students? And if you look into point number 3, what it says, the assessee should not carry his business and profession in such house property. So he should not carry his business and profession in such house property. What does it imply in this case? Now, can we therefore say point number 3 is now not getting fulfilled? Why is it so? Because we can easily say in this particular situation that the SSC through the tenant, through its tenant, is conducting his business. And what is that business? The business of giving the property on lease. The business of giving the property on lease. So accordingly, through such house property, the SSC continues to carry out its business. Through such house property, the SSC continues to carry out its business, the business of the giving the house property on lease. And therefore the condition required, the condition of point number 3 is not satisfied, in which case the chargeability under section 22 will not be attracted. In such cases, the chargeability under section 22 will not be attracted. So the third condition, students, is the catch point over here, that the SSC should not carry his business or profession in such house property, and in this particular case, by giving this particular property, the house property, on rent, which happens to be his business. Therefore it can be said that the SSC through such house, through his house property, is carrying the business, carrying its business, and therefore what, the conditions laid down under section 22 is not satisfied. And where the condition under section 22 is not satisfied, the chargeability will not be made under 22, it will be going under section 28. What is 28? PGBP. Quickly, therefore, students, take a note of this important judgment, Chennai Properties and Investment Limited. Now students, when you have to write the answers, you should, as I told you, be very careful. When you write the answers should have essentially the court's observation. There are different ways of arriving at the answer. Finally, all the answer would be the same, but ICAI will expect you to write the court observation itself. On what basis the court has finally concluded that this classification will be made under this particular head. So as I told you, there is no harm in having any other observation that also would be equally be correct. But unfortunately, we can say, to get the marks in the examination, we have to stick our neck to the observation given by the court in order to arrive at its conclusion. So please don't deviate. That is my suggestion to all of you. Okay, quickly take a note of this particular point. Chennai Properties and Investment Limited, students, Supreme Court. Please take a note of this one. I'll give you a brief fact and then immediately we'll come towards the court observation in this. The SSC was engaged in the business of developing the house property for the purpose of the rental income earned would be classified in which head? The rental income earned would be classified in which head? So answer, students, as we all know, the first point always happens to be the relevant provision. Okay, the provision I have already written above, so I am not repeating it again. I am just directly jumping into the analysis part. In any case, in your booklet, this particular provision would be there. So let's focus on the analysis part right now. Okay, so see, students, that is the point. this is would be the game as to what you analyze in terms of your the court observation. The analysis is essentially a court observation. So on what basis the court has finally made the conclusion that it will be charged under the head PGBP, not under the head house property. So first point was herein the MOA. So what you should do, students, just when you revise, because you will have the equal challenge and the responsibility to do a revision, so you should be revising like through these key points. MOA, that's it. Then suddenly you should, like in that case, you should recall what is the point of discussion in the MOA, and that was the object clause, and that is the what is the main object of the company. So herein you can just write the Supreme Court. Although I may say, students, in the examination, please don't write like this MOA. This is only for the purpose of your memory, so that you can in fact try to retain the key particular terms on the basis of which the court went on to suggest about the court went on to conclude. So the first point, MOA, the Supreme Court referred the MOA of the company, where it was where, just write like this, where its main object was that of developing the house property for the purpose of let out. The Supreme Court referred the MOA of the company where its main object was that of developing the house property for the purpose of let out. Okay. Point number 2. Herein Section 22 not applicable. The chargeability under Section 22 shall not apply since the SSE is conducting its business in the bracket, right, leasing, since the SSE is conducting its business through such house property, since the SSE is conducting its business in the bracket leasing business through such house property. Okay, this 2 points only, students, that is what you are supposed to write for the purpose of your final conclusion. Now you can just put across this one, conclusion. Therefore, based on above, comma, the rental income shall be charged under the head PGBP and not under the head IFHB. Keep it simple, but make it, students, as decisive as possible. Don't try to deviate in terms of the reasoning, which otherwise is deviate from the reasoning given by the court. Just stick to what the court has suggested in arriving at its conclusion. Okay, so just that is the reason why these small headers which I have created, like section 20, do not apply. Although, as I told you, you may not write it in the examination. Choose not to write it, but at least that section 20 is not applicable. If you can revise it that way, this will at least give you the direction to your answers. This will give the direction to your answers. Okay, students. So this is how the things are. Chennai Properties and Investment Limited. Now, students, let me then ask you one very important proposition over here. This was a case wherein the business of the builder or the developer was to develop the property for the purpose of leasing the same. For the purpose of leasing the same. How about another particular example? Please pay attention to this one. How about the other particular example where the business is of that particular developer or the builder is to develop the property for the purpose of its sale. To develop the property for the purpose of what? Of its sale. So if this is what happens to be the business of that particular, if this is what happens to be the business of that particular SSC, then the question arises is this: what will be the treatment of the property? Now, these property, students, understand one thing first. These properties are held as a stock in trade because I am developing it for the purpose of sale. So in that regard, these properties are something which would be held as a stock in trade. All of you will agree to this? Yes. Now, if it is held as a stock in trade, now accordingly, students, be careful on this particular point. You will find today, like due to this COVID factor also, even earlier as well, even before COVID, just imagine, before COVID also, there was the real estate was already in a very deep recession. Now with this COVID, I don't know what will happen. Many of the developers and all, they are going to get a big time hit. So we find that there is a lot of unsold inventory which is already have piled up. Now what these builders are going to do about these unsold inventories which is already being piled up, what they are going to do? Now sales are getting difficult day by day to sell these property at the price which is that of the pre-COVID scenario. So technically speaking, these builders, if they are not in a position to sell the property, what these builders will do, they will try to give this property on rent. Generally they will tie up with the companies because everyone will try to do a cost cutting. So therefore they will try to, what the company generally used to do, they used to, for their executives, when the executives used to travel to the other particular cities, they used to get them the accommodation in a hotel. Now everyone is in the cost cutting mode, so therefore the company will now look into some sort of service apartment wherein they can put up their particular employees in those service apartment, and that is what the company will tie up with the corporates. For what purpose? That at least for this 2 or 3 years, till the time the situation improves in the market, I will at least be in a position to earn the rent for those 2 or 3 years, and once the market will improve, at that point of time I will again make an attempt to sell off my inventories. That is what the builders are doing it. So therefore the question, students, is if a builder who has constructed the house property for the purpose of its sale and for some reason or the other he cannot sell the house property and he has given those house property on rent, then in that particular case the rental income will be charged under which particular head? The rental income will be charged under which particular head? Get me the answer quickly, students. Rental income will be charged under which particular heads of income? Quickly, students. Under which head? It will be under the head. In this context, it will be under the head house property. Harish, Rahul, it will be under the head house property. Not under the head PGBP, it will be under the head house property. You also say, how come house property? Now, it is, be careful, students. Why it will not be under the head PGBP and why it will be under the head house property. But again, before I start explaining, please try to distinguish this particular example which I have given it to you with the example of Chennai Properties and Investment Limited. In the context of Chennai Properties and Investment Limited, it is very clear what is that business in this regard. The business was that of developing the house property for the purpose of its lease. This was a business. In my example presently, what I am telling you, the business is that of developing the house property for the purpose of, what is the purpose? For the purpose of sale. So it's a normal case of developing the house property for the purpose of sale, and this particular assessee is not in a position to sell the house property for the reason I have told you. So what he is doing, he is thereafter giving the property on rent for some time, till the time, what happens? Till the time the economy improves. And thereafter he will make an attempt to sell this particular property. So in such case, the rental income in such case which would be the head for its classification. And I have said it, the rental income will be classified under the head house property. Many students are saying PGBP. Now, what is the reason why you have told me PGBP? I can also tell you that. You people are influenced by, I knew that and I was expecting this particular answer from all of you. And that is the reason why the game was being played. The setup was being made to get that answer PGBP from all of you. You people were influenced by that judgment which we discussed in the earlier lecture. What was that? If you remember that earlier class, we were discussing this particular case of this K and Co. Business expediency, because of that the interest income was earned. Then there was another judgment that we did, higher charges on letting out of the plant and machinery, isn't it? So there was a temporary shutdown, and on that there again was a business expediency. There was again a business expediency, and for that reason the higher charges we have said that will be charged under the PGBP. This was our discussion in our previous class. There, students, if you remember in my previous lecture, what we have discussed was that the interest income will be classified under the head IFOS if it cannot be classified under the head PGBP. Same was the discussion that we had for what? The higher charges for letting out of the plant and machinery of furniture and fixture will not be charged under the head IFOS. Will be charged under the head IFOS if it cannot be charged under the head PGBP. So what we were doing in that case, in those two examples, we were trying to exhaust the option of PGBP. Only when the option of PGBP has been exhausted, that the chargeability will be attracted under which head? Under the head IFOS. So therefore the angle of business expediency has came into account. The angle of business expediency has came into account. Okay. However, here, students, independent charging sections are there. All the charging sections are independent charging section. In the context of a general charge, in the context of the general charging section, they are all independent charging section. And if they happen to be an independent charging section, they are giving you independent test. Fulfill this test and you are all welcome. You are all welcome for the purpose of your chargeability. In this context now, you will look into section 22 again, and the 22 has got three conditions. One is that ownership. Second is what? Property should consist of building and land appurtenant thereto. Even that is satisfied. And what is the third point? The assessee should not be carrying out its business in that particular house property. Now you tell me, what is the business of the assessee? Developing the house property for the purpose of sale. This is the business, and not for the purpose of let out or leasing. Leasing is not the business of the assessee. The business of the assessee is that of the sale, and therefore if he has given the property on lease, it cannot be said that the SSC is carrying the business in that particular house property, and therefore all the three condition of section 22 is getting satisfied. And because all the three condition of section 22 is getting satisfied, accordingly the chargeability will be under the head house property and not under the head PGBP. This is exactly what you should always keep in mind. I hope, Harish, you have got hold with this particular thing now herein. So in this context, the leasing when he does that is not the business, and if it is not the business, therefore we will say that leasing the property is, since the leasing of the property is not the business of the SSE, therefore the rental income arising from that particular rental income arising from such activity will be charged under the head house property and not under the head PGBP. All of you will take a note of this one, students, quickly. Write a note in this case, just below this. Now students, just before this note, one point I just wanted to discuss, because this is a very, I just wanted to know how many of you are aware. IPCC, I don't know whether you have read it or not. I don't think it will, you would have read it in IPCC, but still, students, now we have considered that the house property which the builder is developing for the purpose of sale, which is the house property is held as a stock in trade. In respect of an unsold stock in trade, if the same has been let out, then the rental income will be charged under the head house property. Okay, but what about the fact that the remaining, it is, you can see in your cities also, students, just see the real estate scenario. 60% of the inventory of all the builders, 60% of the inventory of all the builders are unsold. Now, when I say that they, till the time the market improves, they will try to do what? Leasing agreement, so as to get some rent. But are they in a position to do a leasing agreement in respect of all the 60% of their house property, which is held as a stock in trade, but which continues to remain unsold? Whether they are in a position to do all leasing of all the 60%, and the answer is no. In that, hardly there is like 10 to 20% they are in a position to do leasing of their house property. Balance 30 to 40% is still with them, and they are held as stock in trade, unsold, and for them they are not in a position to do leasing. Therefore, if that is the case, and we have just now concluded that for this SSC house property, the annual value of the house property will be charged under the head house property, then in that particular case, this 30% stock in trade, the house property which is held as a stock in trade, for them there would be a concept of DLOP that will come into play. And you can just imagine whatever little life that the builder may have, that life would be taken away by the concept of DLOP. That 20 to 30% of the unsold stock in trade being the house property which also cannot be leased out, those particular house property will then be considered as a DLOP. And if it is considered as a DLOP, now you all know what will be the impact. So are you aware of any amendment made in the recent past? Just wanted to know, out of my curiosity, I just wanted to know any amendment that you all are aware, anything in recent past starting with 2018. That is a hint which I am giving it to you. Finance Act 2018, then again 2019 something happened. Are you aware of that? These amendments were there under the head house property. Say any amendment. 30 seconds I am going to give everyone an opportunity to think about it. Think for pen drive and G drive students, and to type for the live batch students. Are you all aware of this amendment? Just wanted to know. Good morning, Akash. I'm LLM tax law student. I like your teaching style. Thank you, Akash. God bless you on all the best. So, students, in this context, let me then give you the answer. In Finance Act 2018, there was an important amendment as per which for a period of 1 year from the end of the financial year in which the completion certificate has been received in respect of that particular building, the GAV of such house property, which house property we are talking about? The house property which is held by the builder as a stock in trade and which has not been let out at any point of time during the previous year. So such house property which is held by the builder, that will be the GAV of that particular house property will be considered as nil. This was the first time the amendment that was being made in FA 18. But the government thought that in 1 year the economy will improve. Unfortunately, it didn't improve. So what they did was they extended the time limit in FA 19 and they made it to 2 years. So they made it to 2 years, and by virtue of that, what happens now? That from the end of the financial year in which the builder has received the completion certificate, from the end of the financial year in which the builder has received the completion certificate, from that plus 2 more years, and that will be the that will be the period for which the GAV of such stock in trade, such house property held as stock in trade, which has not been let out at any point of time during the previous year, the GAV of such property will be considered as nil. This was one of the very big relief. I think now it is also due for more amendment, because post COVID we all know the things is not going to improve. So we are there for a long haul as far as the real estate sector is concerned. I'll discuss separately, students, towards the end, not right now. Once I'm done with my house property, that is somewhere in the last module, we'll consolidate the real estate tax transactions. We'll consolidate our discussion for a real estate tax transaction, because there are too many pointers which are there from each heads of income. See, now you can understand, okay, fine. The builder here who is holding a stock in trade, who is holding the house property as the stock in trade, there is some implication under the head house property as well. At the same time, house property will not be applicable for those builders who is developing the house property for the purpose of its leasing business, who are developing the house property for the purpose of their leasing business. So this particular head is not applicable for them. The head that would apply would be the head PGBP. So this is sort of, students, and then capital gains also, you are aware, and there is some 43CA. So a lot of things are there from this business entity point of view, from the investor perspective who is investing in the real estate transaction, gift tax, lot of things. So you can just imagine a real estate transaction by itself can become a small module or small subject on it by itself. Taxation of a real estate transaction. Okay, there are too many points which is spanned over in the entire income tax law. Okay, we'll deal with that, students, but that I will do it in my last module, and I will devote one full session in that regard so as to give you the interplay in the real estate transactions. First, let's quickly write this particular note. Quickly, students. Where the SSE is engaged in the business of developing the house property where the SSE is engaged in the business of developing the house property for the purpose of its sale, that is, the property is held as a stock in trade, comma, the rental income in respect of such house property given on lease shall be classified under the head IFHP, income from house property, since the business of the SSC is not of leasing the house property, and hence it cannot be said that the SSC is engaged in carrying its business in such house property. Carrying its business in such house property. Please also do write that important amendment. At least, although this will be repeated again while we do house property, but the fact that this house property is in our last module, salary, house property, these two topics we'll do in our last module, salary, house property, and clubbing. So the small IPCC related area, students, we will do in our last module. So that is the reason why at least this main point I'm extracting for you here itself, so that you are aware as to how the things will be considered later on. So just try to write here a note, just write here in amendment. The GAV of the house property shall be considered as nil if the following conditions are satisfied. So what is that condition? Point number A. The house property is held as a stock in trade. Point number B. Such house property has not been let out at any time during the previous year. The above benefit shall be available up to 2 years from the end of the financial year in which the house property has been. The above benefit shall be available up to 2 years from the end of the financial year in which the house property has been. Sorry. You can just delete this point, friends. In which the completion certificate in respect of such house property has been received. The above benefit shall be available up to 2 years from the end of the financial year in which the completion certificate in respect of such house property has been received. Okay. If you have written this, I will ask you one question here. Just want to get the things clear with all of you. All of you are through with this one, students, isn't it? Now, students, the question is, say for example, now we have got a timeline of 2 years from the end of the financial year in which the completion certificate has been received. I have got the timeline of 2 years. My question to all of you is that, say for example, students, in the first year, if I have given the property on rent, okay, I'm talking about who? I'm talking about the builder who is holding the house property as a stock in trade. So because he could not sell the house property, so what that builder has done, he has given it on rent. So he could manage to give that house property on rent in the first year. Second year was a period, it's a lull period. Lull period means he could not even give the property on rent. So therefore the question to all of you is whether the benefit of this particular amendment, can it be available for the second year? First year, definitely he will not be in a position to get the benefit of the amendment for the reason all known that the property was given on rent. But can he take the benefit of this particular amendment for the second year? Second year means what? The second year from the end of the financial year in which the completion certificate has been received. What is your take, students, on that? Can he take the benefit in the second year in this context? And the answer is, can he take the benefit? And the answer is yes, he can take the benefit, students. And why is it so? Because if you see very carefully, yes, why is it so? Because if you see very carefully that such house property has not been let out at any time during the previous year. So each previous year should be considered to be distinct with the other previous year. Yes, indeed. So in this particular case, students, each previous year should be considered as distinct for the purpose of the satisfaction of the condition. So the condition that you are going to test will be tested for each previous year. Please keep this particular point in mind. Okay, so make no mistake that if he happens to let out in first year and let out could not be done for the second year, that does not mean that if you have done for first year you cannot take the benefit in the second year. No, each year will be considered as distinct. Yes, Balaji, Harish, Akash, perfect. All of you have given the answer correctly. So in this regard, students, in this context, let's look upon to this now. So this was the, please keep this point in mind, because this case law with the other one we are doing a comparison. Chennai properties business is the key point, developing for the purpose of lease versus developing for the purpose of sale. See the impact. Fine. Now one more case law, students, I'll do it in this part. Now other case law we will do it in the other part B. One more case law, students, again a Supreme Court one, judgment. Raj Dadarkar and Associate. Raj Dadarkar and Associate. Supreme Court. Students, even this has been ICI in their booklet, in their module, they have introduced this case law, although I may say that they haven't asked any question so far on this case law. So it could be an important one for your examination, so just keep in mind. Let's discuss quickly the facts of the case. Students, here, as the name of the SSC itself will suggest you that this particular SSC is a partnership firm. So this particular SSC is a partnership firm. Now in that context, what happened was that, students, that this first there was a concept of a deemed owner which was involved, section 27. Students, I think if you can faintly recollect, in IPCC you have done some deemed owner in section 27, isn't it? So here also this partnership firm, in respect of that building that they have obtained, their partnership firm was considered as a deemed owner. I am not trying to analyze, I am not interested right now at this point of time to analyze this deemed owner condition. That we'll do it when we do house property head, but for the time being this was also an area of the discussion in this case law. And what was that? That the partnership firm, on the basis of the provision of section 27, was considered as deemed owner, and because the partnership firm was considered as a deemed owner, therefore the first condition of the ownership under section 22 was fulfilled. Okay, I come to the main point of our discussion right now. So here was a partnership firm who was considered as a deemed owner in respect of a particular building which they have given it on rent, and accordingly they were getting the rental income. Getting inspired from this judgment of Chennai Properties and Investment Limited, the partnership firm had classified this particular income under the head, which head? Under the head PGBP. The department, in the course of the assessment, while the department were undertaking the assessment, they however classified the income under the head house property. Obviously when they classify under different head, the computation, net computation will be different, and that will result into the different tax liability calculation, and that was the reason of the litigation between both the SSC and the department. Matter went up to the Supreme Court, and see the way the court has observed this particular facts. So I have given you the limited facts. Now see the way the court has approached, and try to appreciate the consistency in which the court is approaching. What was the situation that was being discussed in Chennai Properties and Investment Limited? What was the way in which the court has arrived at this one? So the court has looked into the constitutional document. In the context of a company, the constitutional document happens to be the MOA. In that they referred the object clause, and through that they got convinced with the fact that the main object of the company remains as what? Developing the property for the purpose of its leasing. That was the comfort drawn by the court. Here also the same approach the court has followed, students. This is what is a key takeaway. That's the way you read a judgment. So that's the key takeaway. The court again followed the same approach. They referred to the constitutional document, and the constitutional document in this case happens to be the partnership deed. But the language, students, was quite vague. The language which was written, the object of the firm in respect of that building, was quite vague. Vague means not that clear. In fact, to be very precise, what was that object written in the partnership deed was something like this: that the partners will decide from time to time as to the manner in which the property would be dealt. The partners will decide from time to time as to the manner in which the property shall be dealt. It means what? It means that it was completely left to the discretion of whom? Of the partnership firm to decide as to how they want to treat this particular property. Completely left to the discretion of whom? To the discretion of the partner as to how they want to treat this particular property. And that exactly primarily was the vagueness in the partnership deed about the object of that particular firm or the treatment of that particular building. Okay, now the fact that the onus was on the partner as to let they decide as to how they have to treat this particular building, then the Supreme Court also, on the basis of the onus on the partners, the Supreme Court observed that even the partners have failed during the course of the assessment to prove to the AO that their main income or substantial income is coming from the rent from letting out of the house property. So they have failed to also establish that their main income or their substantial income is coming from the rental income of the house property. So even that could not be discharged by the partnership firm or their partners, and hence the Supreme Court finally concluded that since the firm, being a deemed owner of this particular house property, and all the three conditions being satisfied of section 22, namely the property, the SSE is the owner or the deemed owner, yes. The property consists of building or land appurtenant thereto, again the answer is yes. And the third one, the SSE is not carrying its business and profession in such house property. So it could not be established by the firm or its partner that the leasing was the main business or the business of the partnership firm, and hence the rental income in this particular let out of the house property was successfully classified under the head house property. This was the judgment of Raj Dadarkar and Associates. So students, try to appreciate the manner in which the decisions are being delivered, so that your approach of writing the answers should also be on the similar lines. Quickly take a note of it, students. Brief facts. I'll just give the brief facts herein. The partnership firm was considered as the deemed owner of the house property under section 27. It has given the said house property on rent which was classified by the firm under the head PGBP. Okay, so this was the brief facts, and then let's look across the solution. So first point, students, always relevant provision. Okay, we all now know what is the provision that we are supposed to put across. Second, directly come to the analysis. Now students, in this relevant provision there was something about section 27, but I told you already that 27 I am not interested right now to discuss about deemed owner and all. We are focusing on our point about the classification, not that owner or deemed owner thing. This is not our area of interest at this particular juncture. Our focus is on classification. So analysis herein. So how you are going to build your answer? Point number A would be the MOA, the partnership deed. Here the constitutional document happens to be the partnership deed. And right therein, the Supreme Court observed that the partnership deed was inconclusive as it empowered the partners to decide as to the manner in which the house property shall be dealt. Second B point, students, what I am writing: partners fail to discharge the owners. Partners fail to discharge the owners. Owners means the burden. Further, neither the firm nor its partner could establish that the main income or substantial income arises from letting out of the house property and the third one, conclusion. The Supreme Court therefore held that the rental income shall be charged under the head house property and not PGP. The Supreme Court therefore held that the rental income shall be charged under the head house property and not PGP. Did you all got this one, students? Fine. So this is all about the case which I have to mention. Important judgment, students, we have dealt with it. Interplay happening between what to what? Interplay happening between the PGBP and the IFHP. This is the interplay between the two heads as to which head in which the income will be classified. So we have kept the charging section of the head house property and try to analyze whether the condition of section 22 can that be considered to have been complied for the purpose of the chargeability, isn't it? And that is what we have done so far. In the next part, students, we will discuss some more case laws, and also I will bring into to your observation the interplay between the charging section of the head PGBP and the charging section of the head capital gains. Okay, so even the capital gains general charging section I'll come into I'll get into that interplay between the two charging sections so as to determine as to which is the appropriate head for classification of the income. Again, I'm repeating this point, students. The first step in the computation of the qualifying income, the first step in the computation of the qualifying income is the classification of the income in the appropriate head. When it comes to classification, first we'll look into the specific charge, and if there is no specific charge in respect of the qualifying income, then such qualifying income will be classified based on the test laid down in the general charging section, which is nothing but the first section of each and every heads of income. Once the classification is appropriately being made, then we go to the next step of computation. And what is the next step of the computation? The actual computation in terms of the rules which are being laid down, the actual computation in terms of the rules which are being laid down in that particular heads of income. This would be our next particular step, which actually the first head which we are going to pick it up will be PGBP, where we are going to discuss the rules of the computation of the income under the head PGBP. Did you all got this one? Okay. See you then in part B, students, tomorrow evening at 6:30. 6:30 primary tomorrow evening we are going to take across to our part B tomorrow evening. See you then, students.